SoFi, why am I talking about SoFi stock? Well, the stock has been very hot, but specifically a channel member, which YouTube has these channel members, and a channel member, it caught my attention. This channel member said, hello, Jeremy, I'm here from Iowa. Wanted to ask if you'd be willing to make some analysis on SoFi. So here we are. Right now, if you're a channel member, I'm not always going to be able to specifically talk about whatever stocks you want me to talk about, but if you want to become a channel member, it's a much easier way for me to see your comments. And you know why? Because this is how many comments I get per video. The last video I did got 1,200 comments. The video before that, 1,100. The video before that, 1,100. I cannot read all the comments. I can read a good chunk of them, but not all of them. And think about all the stuff I post on X and all the comments on those. Think about all the DMs I get on Instagram daily. I can't see it all. And so if you want an actual way that I'll be able to see your comments for sure, become a channel member and there's a much higher probability I'm going to be able to see it. Doesn't mean I'm always going to talk about whatever stock or subject, but if you want to suggest, hey, Jeremy, could you talk about this subject? I might see that and be like, you know what, that's a good subject. I'll sneak that into a video. Or, hey, can you talk about this stock? I might talk about it. Okay, so if you want to become a channel member, I think it's like $4 or something like that. You can certainly do that. I don't know how to do it, but you can do it. Okay, you figure it out. Okay, so SoFi, what's going on here? Well, I posted this inside the private stock group yesterday. Galileo, the B2B financial services arm of SoFi Technologies, is emerging as a key engine of growth in the rapidly expanding embedded finance market. By offering seamless payment and lending integrations, Galileo enables financial and non-financial firms to embed banking capabilities directly into their platforms. This strengthens SoFi's competitive edge and opens up new revenue streams, as embedded finance is expected to witness a CAGR, compound annual growth rate, of 16.8% through 2029. That's actually a really strong. I didn't know it was going to be that strong of a growth rate. I'm like, holy smokes. That's actually very, very bullish. Galileo's ability to attract high-profile clients and scale its offering positions SoFi as a serious contender for long-term leadership. SoFi is leveraging Galileo to diversify beyond its core consumer lending business, tapping into the broader digital banking ecosystem. The platform's adoption by other financial firms not only validates its technology edge, but also enhances its network effects. As any big tech company, one of the most powerful things you can have is network effects. Improving monetization potential. As the digital banking platform market is poised for substantial growth, Galileo early momentum provides SoFi with significant competitive edge. As more companies, including smaller traditional banks, seek turnkey digital solutions rather than build costly infrastructure from scratch, Galileo becomes an even more attractive proposition. Ultimately, Galileo is transforming SoFi from a digital bank into a foundational layer in the future of the financial system. Now, if you're super down the SoFi rabbit hole, you know about Galileo, and you know kind of what that represents over the coming years. But I think hearing something like this CAGR of embedded finance really shows you like the potential of Galileo, right? Over the next, we can call it 4 or 5 years here. So pretty substantial in regards to that. And, once again, that's not a business that gets talked about a lot in regards to SoFi, but, some people have kind of equated it to what AWS has meant for Amazon over the past 10, 15 years. That's what Galileo will end up meaning for SoFi over the next 10 to 15 years, essentially, right? Now, additionally, one of my private stock group members put together essentially a, kind of projection in regards to SoFi. And I wanted to talk about this for a moment, right? Dylan in the private stock group, he said, I've been trying to work out and refine my projections. So I thought this was interesting. He has SoFi getting to revenue, in his opinion, of like 9.7 billion come 2029, with net income of about 1.8 billion, which, whew, man, if they're doing 1.8 billion in 2029, oh, baby, let's freaking go, okay? I hope they're doing that. That would be insane. Now, what I think is interesting here is, he has a stock price being somewhere between 27 and 40, right? But here's the thing. He has a PE only being about 19 to 28. If SoFi's still growing, top line 25%, bottom line 30%, they're going to come in easily a 40, 50 PE, probably a lot higher than that. So if this scenario that Dylan has here does play out, right, which is a potential, it's a very bullish scenario, no doubt, the stock's going to be well over $50. if not approaching $60 or $70, because a PE the stock will be able to command will be exponentially higher than this. Like a 19 to 28 PE, that would be fine if the company was growing revenue at that time, let's say like 7 or 8%, maybe 9%, right? Something in that like high single digits. 25%, come on. Net income, if they were growing like 10% net income, that would be fine to be in that 19 to 28 range, but 30% growing net income, woo-wee, that's a holy smoke, this ain't no joke. So if his scenario plays out, that stock's way over $50 come 2029. Let's hope that happens, right? Now, also, this was posted inside the private stock group. This is interesting, right? This person says, not sure if anyone knows Caleb Hammer. Caleb Hammer, big person in personal finance on the internet, right? Kind of a little bit of a Dave Ramsey type approach, but just, I would call it like, attracts more like the millennials, Gen Z, folks like that to watch him, right? But very personal finance focused, and it goes through people's finances and whatnot. They said, Caleb Hammer is now doing integrations for SoFi, which I think is genius by SoFi. I think it just goes to show like SoFi understands like where people are at, where the attention's at on specifically the type of customers they're trying to attract. And who is SoFi trying to attract? They're trying to attract millennials and Gen Z, because that's who's going to be obviously getting massive amounts of wealth over this next couple decades, right? And those are the folks who aren't necessarily super loyal to a bank yet. If you talk about baby boomers, like if a baby boomer has been using Wells Fargo for the last 30 years, they're not switching to SoFi. Like the chances of that is like 1%, okay? If somebody that's 55 years old has been banking with Bank of America for the last 27 years, like there's a very low probability they're switching from Bank of America, right? And they're going to start using SoFi. And so if you really want to attract the customers, you got to attract the millennials, you got to attract the Gen Z, and so who's got that sort of viewer base? I could tell you somebody like Caleb Hammer definitely does. So brilliant by SoFi, and definitely shows you they're always looking forward, right? No, I ran a scenario here. I put it under bull case, but this is actually kind of a little bit more of a base case or bear case, I would say, for SoFi over the coming years. So I have them doing 30% revenue growth in 2026, 25% revenue growth in 2027, 20% revenue growth in 2028, and 15% growth in 2029. That would put them at about just under $7.5 billion of revenue. Now, if you look at somebody like Dylan's projection here, that's way under that. I mean, I'm over $2 billion under that in this scenario. But once again, this is not actually my bull case for SoFi. This is more of like a base case, bear case I put together here. Net income growth, 40%. 2026, 35%, 2027, 30%, 2028, 25%, 2029. Puts them at net income margins of 13% come 2029. A 30 to 50 PE at that particular time was fair, and that puts the stock somewhere between $26 and $43. And right now, SoFi's $15, right? Which would be still a very attractive return over the coming years. Like SoFi, even under this kind of base or bear case for SoFi, the company should have its stock price expand much more rapidly than, let's say, the S&P 500 goes up or the NASDAQ goes up over the coming years, right? So the moral of the story is here, like SoFi is looking really flipping flapjack and good in my opinion. Okay, I really like SoFi Technologies. Obviously, it comes with risk. It's in the financial space, right? But keep in mind, SoFi does a great job of getting a lot of the loans off their books. They sell those to somebody else, and they just make a commission. So SoFi's in Anthony Noto. He's really trying to run the business as asset light as realistically possible, which, I appreciate, because I don't want to be holding a ton of loans come the next big recession, right? I'd rather get those babies off the books as much as possible. Honest stock. Let's talk about Honest, HNST. So Honest stock was also, by the way, somebody had suggested I talk about why it's going down recently, because we have 53 channel members on the channel. So once again, if you want to become a channel member, you feel free to do so. It's definitely a much higher probability I'll be able to see comments from somebody like that, right? But, this stock, 18% down the past month. What happened? What's going on here, right? Well, there's no news. There's no news. There's nothing. There's nothing about Honest. There's no news in regards to this situation. Nothing, right? And so you got to understand, Honest is a very small market cap, $480 million, right? If you don't have any news for a stock like this, you might have a lot of retail investors in it. Let's say, for instance, with the market cap that is small. Or very small hedge funds, things like that, right? They get bored. They get bored, man. You got no news, nothing going on, right? They get bored. And they say, I'm going to go buy Palantir stock. Or I'm going to go buy the new hot IPO, because that's where the action's at right now, right? Not honest, there's just nothing happening. The company's executing great, right? There's no question about that. This was the latest income statement for the company. Got a B plus grade from me. Revenue went to $97 million from $86 million. Gross profit went to $37 million from $31 million. Operating income went to $2.5 mil from negative $1.3 mil in the same quarter last year. Net income went to $3.2 mil from negative $1.4 mil in the same quarter last year. Phenomenal. Like, great. Honest is making great strides with their business model, getting stronger and stronger and stronger, right? Now, here's where I'll push back. And here's the risky part of, selling out of a stock like Honest just because they have no news, right? When it comes to these sorts of stocks, they go on their run when they want to go on their run. All stocks actually do that, but especially these sort of smaller cap stocks, right, that are under $1 billion market cap. So Honest is up 74% the past year, right? But you got to keep in mind, this stock went from 2 to 8 like that, right? It went from 2 to 4 like that. And then went from 4 to 8 like that. So Honest is a company that can very quickly flip the script and all of a sudden the stock just goes insane. So would I be surprised at all if this stock is $10 or more next year? Not at all. When is it going to make that next run? I don't know. Could be this month, could be next month, could be 3 months from now, 6 months. I have no clue. But would I be surprised at all if the stock goes from 4 to 10 by this time next year? I would not be surprised at all. But when it's going to make that run is completely random. So the risks people take with getting bored with the stock like this and going to position of something else, right? One, that's a trader move. Two, you might end up missing the run. Look at how fast the stock also went from 2 to 4. And then look at how quickly the stock ended up going from 4 to 8. Look, if all of a sudden they come out with another great earnings next quarter and another great guidance, right? Do you think it's crazy to imagine the stock goes 10 plus? No, of course not. Now, if they come out with bad numbers or something, that completely changes things and then it's stuck in, $4 stock. But this stock goes on runs. Now, if I was to suggest one thing to the management team, right, you got to keep the investor base more informed. Like, pay somebody 60, 70 grand a year that all they do is just keep investors informed constantly with news releases. It's not hard. We're changing the packaging of these particular products. That's what we're working on right now. We're getting this XYZ new product into stores, right? Just keep investor relations flooded with news always coming out. We're just getting into this new pharmacy over here, right? We're expanding into this. We just made a change in our distribution of how this, blah, blah, blah. Like, you got to understand, great stocks, like let's say NVIDIA, AMD, stocks like that, right? Palantir. Dude, their news cycle is constant. You can't go a week without some news coming out in regards to NVIDIA, or some news coming out in regards to AMD, or some news coming out in regards to Palantir. Palantir just did a blah, blah deal for $100 million with blah, 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 right? There's always news coming out. With a company like Honest, it's like, okay, you get your earnings and there's just nothing. So if you own Honest stock, feel free to email the investor relations page and say, hey man, keep us more informed. We don't want to just get every 3-month update. We want real-time updates. It's not hard to do. It's not hard to do. Like I said, they probably already have somebody on payroll. Just get them up to a higher level or put somebody on payroll. Trust me, the 60 or 70 grand they would pay to this employee that just is there to keep investors with news releases and what's going on. Dude, that would pay for itself very, very well. Like paying somebody 60, 70 grand a year to do that. Come on, man. I'm sure a lot of you guys would gladly take that role, man. All you got to do is keep investors up to date with what's going on with the company. So they got to do a better job of that. They do a better job of that, I bet you their stock would do way better because then people wouldn't get bored. But people are like, okay, we haven't heard a thing out of the company since May 7th. And, when is the next time we're going to hear from the company again? Like September? Okay. Months and months go by. You don't hear anything. You got to keep everybody, especially when you got a big retail shareholder base, you got to keep everybody in the loop, man. Even small stuff matters a lot to retail investors, right? Even small stuff. So keep that in mind.
Hey, it's Jeremy. I hope you really enjoyed that clip here today. Listen, there are 3 main areas a long-term investor has to understand. You have to understand financial statements, income statements, balance sheets, cash flows. You have to understand and master portfolio management. And you have to have the ability to project what is possible for companies in the coming years. Bearish scenarios, bullish scenarios, All these skills can be learned, and that's the good news. And I'm still just a regular guy who's out here. I just have a lot of passion for the market. I've learned a lot over the last 15 years. I had a tremendous amount of success, and I have a dedication to teaching people everything I have learned in the past 15 years. If I can do it, you can do it too. You can learn all that's required to become a great investor in my private group. The application is going to be down there in the description area. You can click on that, fill out an application, join us in the private group, get access to all my best course curriculums, teaching you everything that I got in my head, and you get ability to join our 6-figure, 7-figure Hall of Fame. We have such a tremendous Discord. It is incredible. So once again, description area down there, there's a link. You can apply to join my private group in there.
Este Lauder stock. Oh my gosh, what's going on here with this one? So Este Lauder, this one is now into a profit for us. This one was a negative position, but now we're up $9,300 in the public account on Este Lauder. So Este Lauder, thing you gotta understand about this one, obviously high-end cosmetics company, beauty company, right? This was a $370 stock back at the end of 2021, right? And this goes back to people not understanding how business models work, how companies are valued, because what ended up happening with Este Lauder, right? Because people were glad to buy the stock at $370 in 2021, right? Today you can buy the stock for $74, and that's up a lot from the lows, right? What happened to people? You know what happened to people? They didn't understand how to properly value companies. If you looked at Este Lauder back then, it was trading at very rich valuations. Look at Este Lauder's PE ratio back in 2021, extremely high, but people were willing to just pay anything for it. 2, people didn't understand business models, and they didn't understand the concept of like everybody's been flushed with all the stimulus money. They're feeling great, so they're glad to go spend anything on these cosmetics products that are very high end, because you know what? They got a lot of money right now. They're flush with stimulus money. They're flush with money in general, right? Inflation comes, boom, it knocks people out left and right, the consumer, right? And the consumer also comes back to reality. And when they came back to reality, it severely damaged a company like Este Lauder at that particular time, right? Their numbers have been horrible last couple of years after the consumer ran out of all that stimulus money they had for previous years, and after they had been sliced and diced by inflation. So what you witnessed is 2022 down, 2023 down, 2024 down, right? And now Este Lauder is kind of in like a bottoming phase for the business model, and they're about to start growing back once again, okay? Now, when it comes to Este Lauder, a few things came out here. This one actually came out Friday. Este Lauder launches on Amazon.ca to expand the reach in Canada. So back in the fall time, Este Lauder debuted their Amazon.com premium beauty store. So that was a big step in the right direction for Este Lauder. Like Este Lauder, all their brands, they own so many different big brands, but they were the big name. If you go to Nordstrom department store, you go to Macy's, you go to Dillard's, and that's great, right? And they built a super successful business model on that. It's 2025. You've got to be on the internet. You got to be on Amazon. You got to be on all the e-commerce platforms, right? You got to sell digitally. If you don't do that in this day and age, you will become irrelevant. You have to do that, right? And so seeing Este Lauder take these steps in the right direction definitely shows that the management team is committed to understanding, like, we got to be everywhere, man. If somebody, TikTok Shop has been taken off. If somebody wants to buy an Este Lauder related product or any of the companies that they own, if they want to buy that on TikTok, you better freaking be on TikTok, okay? If somebody wants to buy it off Instagram Shop, that's a big thing that's been popping off, you better be there. If you aren't there, you're irrelevant. They will buy something else. They'll go buy Elf products. They'll go buy whoever products. They won't buy your product. You know why? Because you're not even available. And so you got to be there, man. It's like imagine you're running a cosmetics company in the 1990s, and you're not in Macy's, you're not in Dillard's, you're not in JCPenney, you're not in Mervyn's. Mervyn's blast from the past right there, right? Mervyn's. You're not in Nordstrom, you're not in Saks Fifth Avenue. What are you? You're irrelevant if this is the 1990s and you're not in those stores, right? And so the same exact thing, you're not on Amazon in 2025, you're not on TikTok Shop and Amazon and Instagram Shop and all this stuff. You're irrelevant nowadays. You've got to be there. You got to be where the people want you at, right? Now, additionally, this came out last week. Deutsche Bank adjusted their price target on Este Lauder to $71 from $60. So what this smells like to me is analyst sentiment lows have been hit now at this point in time in regards to Este Lauder. Like because when a stock goes through that sort of downfall, it's just a massive, like, analysts just bring more negativity to the company, right? And I believe now we're at a point in time where that negativity has already bottomed and we start moving up. And that these analysts matter a lot, in regards to where stock prices go in the short term, right? Now, the big news that happened today in regards to this is Leonard Lauder. He's a son of Este Lauder. He died at 92 years old. And that was the only reason, honestly, I could find on why the stock was up 10% here today. And that's wild, man. Like, imagine dying and your stock goes up 10%. And this is the type of stuff that scares me. I mean, I don't know if I ever want to take 1000X public, someday, right? I'm like, I don't know about that, because imagine, some people say, okay, you go to heaven, but then you can look back down on earth. Man, I'll be honest with you guys. I'm going to be really honest. I don't want to look back down on earth. If I'm fortunate enough to go to a heaven-like place, I don't want to look back down on earth. Because you know what's going to happen? I go to heaven, and then I'm going to be looking, and I'll be like, oh my gosh, my stock price just went up a bunch because I died? What? You got to be kidding me. Like, how could they disrespect me like this, right? They're like, oh, Jeremy finally died at 122 years old. Thank goodness. Like, he was holding 1000X back in the biggest way. He still wanted that to be an internet service. Now we just plant the chips in people's brains. We've been telling him that for the last 22 years, but he just doesn't listen. The guy's so old, but he dies, and now the stock has gone up 1,000% because they're actually doing the right stuff with the company at this point in time, man. That's rough. That's rough, man. I mean, to die and your stock goes up 10%, that the news comes out, like, oh gosh. So he had this position of kind of like chairman at the company, even up to the point when he passed away, essentially. But crazy situation in regards to that. And by the way, for anybody watching this right now that's got daughters, I think one of the most underrated women in history that doesn't get talked about enough is Este Lauder. She was a businesswoman in a time period when a lot of women were not even driving. She was a businesswoman when a lot of women weren't even working. Like, this is like peak, like, traditional kind of values and family values, and the woman was just at home, and you couldn't run a business back in those days, right? And she built an insanely successful business that ended up becoming a cosmetics giant, obviously, right? And she was actually the only woman on Time Magazine's, back when Time Magazine was like a huge thing, she was the only woman in Time Magazine's 1998 list of 20 of the most influential business geniuses of the 20th century. So if you got a daughter out there, educate them on Este Lauder. I think she's a really good role model in regards to somebody that built a great giant business that has lasted, way after her passing. And, in a time period when that wasn't even a thing. Like that's just crazy, man. So bravo to her.